So let's get into that. I think the biggest thing we should talk about is gap profitability, and then we'll let the conversation go into a bunch of different areas. But obviously, they were gap profitable last quarter. S&P 500, they made a big deal out of that. The question is, do you think we have the metrics, the deals, the cash flow to be able to maintain gap profitability? Do we do enough corporate fiscal responsibility in terms of reducing enough costs to be able to financially engineer this? And if we aren't gap profitable, what do you think the implications of that are? Dom, we'll start with you since we haven't seen you for a couple months, and then we'll move on.
Yeah, glad to be back, guys. First one, just give a shout out to the three gentlemen on the pod here, man. I've just been watching all your guys' videos, and got my new little Apple pen, and with my iPad, I was taking tons of notes on all the videos you guys have put out. I don't know how you guys do it between just normal life work and then doing this. So mad props to you guys. Yeah, no, so I definitely think that we haven't seen a lot of announcements from them, right? You haven't seen a lot of deals and a lot of visibility, the flash like we normally have, kind of people trying to do back of the math napkin stuff with, you know, where you can project where they're going to fall on earnings. And it really comes down to what they do with their SBC, right? To see if they want to keep gap profitable. Loved your video, Amit, about, you know, the idea of, hey, we made some, you know, news and notification that with this new change, you know, we got the founder-led shares. If we have 4 quarters in a row gap profitable, maybe we enter the S&P 500. You know, one of my other favorite holdings, Axon Enterprise, just entered, you know, S&P 500. So I thought that was a really interesting take that you had on that. A lot of people, you know, tons of people making Palantir videos on the YouTube communities, and a lot of people think that, hey, this is going to be the quarter we miss. We're going to, you know, be gap profitable for the year, because that's what Karp kept saying over and over and over. It wasn't like he talked about consistency as far as gap, but more just for an average. And to your point earlier, Amit, before we jumped on, I think if we don't hit gap profitable, I think there will be a sell-off. If you look at what happened in the market today, it was super green except Palantir till the end. You know, so I bought more shares today just because, you know, long term, I need to get my cost basis down. And overall, I mean, gosh, did you guys watch that AIP demo? Well, I know Amit did because he put a video on it.
We'll get into that. We'll get into that.
Blown away. So yeah, I honestly, I think it's unpredictable. I don't like to buy before earnings or after, but I just wanted to get my cost basis down, so I bought some shares this week.
Okay, Arnie, your thoughts on gap profitability and if we make it this quarter?
I would say, is this important? I would say from a perspective from the very short-term stock price movement, could be the reality as an investor is that it doesn't really matter. And why? Because Palantir already showed that basically if they want to be gap profitable, they can do it. Now, the other question is, do they really want to exploit the full potential of contracting margins, for expanding margins by reducing cost right now? I'm not really sure about that. Now, this means that the management is in control of the narrative. And let me point this precision out. We are talking about as entering the S&P 500 with 4 quarter positive quarter in terms of EPS. But the crucial word is not consecutive, but in the S&P rules, it is written cumulative. Cumulative means that potentially you can have like minus a little amount, minus a little amount, minus a little amount, and then boom, a big amount. Maybe only the 4th quarter to be very positive, and that's enough to actually enter the S&P 500. So I would not focus too much. I would not have a drama on in the case they miss for this reason. And I don't know if I can show the screen.
Yep.
Here you can see from by excluding the stock-based compensation, we know that Palantir is already very positive in terms of EBIT margin. But the line we see below is the EBIT margin once you also consider in the SBC as a true cost. And this probably is the most important chart that we were needed to track. Once you are at -3% EBIT adjusted margin, and you have a cost structure like Palantir where the revenues are recurring, and you can basically choose how much you can spend on marketing, on R&D. It's there. Does the management really want to do that? I think it could do it just to make Wall Street happy. So my guess is we will see a number very close to 0 just to make Wall Street happy. If it's negative, but let's say the EBIT margin is -1, is that a problem?
So I agree with that, Arnie. I was just going to say one other thing to that. If you saw Tom's video, when you look at like the last 2 years, the amount of revenue growth and margin growth versus the OpEx and the expenditures, very different. So I mean, this graph here that you have on your screen on the weekly article, it clearly shows exactly that, right? The fiscal responsibility and the efficiencies of the business model itself, which we were talking about 3 years ago, of acquire, scale, and then expansion. It clearly is showing that we're starting to see that more and more, and now we're starting to see more platforms added onto that.
Well, that's the beauty of a SaaS model that actually scales. If you can keep the cost under control, and the cost that Palantir is really good at is keeping the research and development flat, meanwhile literally printing new products that we don't only know that they work, but they are also on top of the curve. So while I see companies like Snowflake, Datadog keep needing to invest more and more in R&D just to develop new products, actually Palantir developed the platform that allows them to build a new product, and we see them doing it effectively. I was looking at a briefly review of the Palantir Bullets articles, because as you commented, hey, in these last weeks, we didn't have so many partnerships, announcements like we were used to. But the reality is that all of the announcements of a partnership were converging in December, early January. And we had actually so many, both from the government side and the commercial side, on top of new products like AIP. Basically, is 2 products because it's one for defense, one for commercial. We had the Foundry Marketplace. So the reality is that Palantir is printing so many products that is even harder to actually track what we do.
Matt, your thoughts on GAAP profitability? Do you agree that, if it happens, it's great, but if it doesn't happen, it's not the end of the world, essentially?
Yeah, I mean, I'm not a quarter-to-quarter kind of guy. You know what I mean? Like, I've been investing in this since 2020 timeframe. My timeframe always been 2030. The timeline for GAAP profitability, which is a fake metric anyway, has been accelerated from 2025 to 2023. And why I call it a fake metric is because, to me, GAAP profitability. Actually, let me take a hold of this for a second. How do you spell GAAP, Amit?
No. So what happened here, bro? Okay, so we edited the video, and he said GAAP, right? I personally went into the edit. I said, oh, it's capital GAAP. Then we realized we messed up another word, so we exported the old version, fixing that word. The word was commercial. There were too many M's, and we left the old GAAP.
I'm just kidding, shit, man. I know how that goes.
It sucked, but it's like, all right.
I know how that goes. I was just messing with you. But to me, GAAP profitability, when you think about it, it includes like non-cash items like stock-based compensation, which we've already been talking about, and write down of goodwill and things of the like. To me, I more so care about actual cash coming in and out of the organization. And so to me, I don't necessarily care about net income and stuff of the like when it comes on a GAAP basis, because you're including things like stock-based compensation that you can kind of make out of thin air, right? And it's kind of fake money. So to me, like, I more so care about that $2.6 billion over the course of the next couple of quarters that they have on cash going to 2.7, 2.8, 2.9, and really seeing that cash position continuing to build, and that adjusted cash flow from operations and free cash, which they made over $200 million of in 2022, continuing down that path. I care about them getting above $510 million in revenue. I care about them continuing to get more and more customers through the door. I care about them getting continued net dollar retention above 110 to 115. I'd like to get it back to 120%. Those are the things I want to continue to see, the things that are positively going to draw this thing into the next direction. And I want to continue to see these foundational pieces. I don't really care about GAAP profitability. What I care about, these foundational pieces of moving into industries, moving into big cornerstone pieces like the NHS, or getting into Poland from a NATO perspective in terms of Department of Defense, getting into these big pieces where you're like, hey, this is another brick in the wall. I'd love to see, with respect to some of the amount of money that we just sent in terms of arms to Taiwan, I'd love to see Palantir getting involved in Taiwan. These are things that I truly care about, because it's not necessarily about quarter to quarter. When you think about this, and Bezos talks about this beautifully, he's like, when you're looking at the internal metrics of the organization going up and to the right, which is positive, right? When you look up, right, positive, who really cares about what's going on quarter to quarter? Because those things and those decisions have been made, quarters or years in the past. When you think about what Palantir truly does, they get into an organization, just like Dom had kind of mentioned, they get into the acquire phase where they're intentionally losing money, giving away the software for free. And then you get into the place where you're actually starting to scale and actually start to create revenue. It takes years for these things to actually become profitable. So to me, getting as many people in the door today just means that in 5-10 years time down the road, we're going to actually start to see the true foundations of really the labor that's been kind of going in. And the last piece I'll kind of highlight, and I actually want to make a video about this, is I saw somebody post something like, imagine having 4,000 engineers working for your company and not necessarily focusing on sales. And it's like, the funny thing is, you think Palantir only has 4,000 employees. Yes, you have 4,000 employees that actually wear the title of Palantir as their hat. But those are the people that just create the operating system, right? But then you actually have the partnerships of working with each one of these people, each one of these companies that are making applications that then you can embed into your own marketplace and sell to other organizations. It's absolutely genius. And I don't think people recognize that. They think that all the software and applications have to be made out of Palantir. Palantir is kind of just creating the ecosystem. It's creating like the App Store almost for the ability to kind of create all these customizable pieces of software. And I still think that people are trying to understand that, like, Palantir is not a software. Like, it's an operating system. Yes, when you look at it from a perspective of, can it be classified as software? Yes, but it's the foundational piece of which your company operates on. It's not like a little piece of application you open for 30 minutes and go off of. And that's the big thing, is like, so when you say there's 4,000 engineers working on the software at Palantir, it's like, those are the people that are working on the infrastructure, the operating system. But then you have literally hundreds, if not thousands of additional employees at every single organization that are creating customizable pieces of software. And that is the true benefit of Palantir. You don't see Microsoft really having that. You don't see Google or anybody else really having that sort of ability where they're interacting directly, building with their clients to create the software systems that are truly bringing themselves to the forward front. And that is truly what makes Palantir beautiful.